First off, just an overview. We're going to go through introductions. We'll go through some of the issues around cash forecasting that are kind of in place right now, and some of our solutions. And then we'll do a live product demonstration of our solution. And then we'll conclude and wrap everything up and answer questions. So with that, I saw the answers to the poll questions. It seems to be roughly aligned with the PwC COVID survey that was just released yesterday or earlier this week. And it also tends to align with almost everything I see in the news and just the pulse of what we're hearing from our customers. I believe, I saw a CFO magazine poll where CFOs were expecting at minimum a number of 3 to 4 tough quarters ahead. So that takes us into 2021. So in cash forecasting and liquidity is at the top of the list on almost everything. And then I just saw an AFP poll that came out and survey that came out yesterday that stated that 71% of all companies are trying to improve their cash forecasting process at this juncture, and another 17 are planning to. So that puts almost 90% trying to get a better handle on how they manage their cash forecast and cash position and build up liquidity buffers to ensure that there's any, in the event that stuff doesn't come back quickly or things just don't recover as quickly as some are saying. So it's creating a security blanket for people, because what we're seeing is companies tend to either be, number one, trying to manage their liquidity processes where they're really getting into the proactively building defensive cash positions and trying to get into the details. Unfortunately, the issues are that they just don't have the ability to do so. So that's kind of a high-level overview of what seems to be going on right now and how that relates to this survey here. And it seems to be pretty common across the group that we have in attendance here. So I'm going to go introductions. My name is Curtis Gratz. I'm the consulting director overseeing the Central and East, as well as our higher ed and healthcare vertical. I bring a deep subject matter expertise through 15 years in banking, valuation, and consulting. I spent a lot of time dealing with cash flow analysis through time in banking, as well as a consultant through 2008, 9, and 10, and then also with the business advisory group at Huron Consulting Group. I am also a certified treasury professional, so I bring that to the table, as well as a certified financial planning analysis professional. I also speak at multiple technology and industry events. I recently spoke at FinNext, and I'm speaking at the AFP conference in Las Vegas. I'm also author or co-author of several treasury and cash forecasting white papers. With that, I wanted to pass it over to my colleague, Matt.
Yeah, I'm Matthew Martin. I'm a CPA and a senior consultant here with Allitix, and I'll be the one who's actually running us through our solution here a little bit later on.
Thanks. So who is Allitix and why can we help? I guess who we are is we're a full service strategy to execution consulting firm who puts our client first. And when I say strategy through execution, we're there to help set the roadmap, help you understand the needs of your organization, and deliver value-added software solutions and technology solutions to help you, get the most out of your investment and see the highest return and insights. We focus on business transformation, data engineering, and integration between various source systems. We also have very deep industry solutions that are somewhat specific to each industry. And we're also an Anaplan Gold partner, which is one of the highest levels within the Anaplan partner ecosystem. We're also have a 94% customer satisfaction score, which just signifies how well we deliver on our projects. The other thing, under the 75% use case expansion, here we're going to talk about a very tactical problem, but typically when we enter into an organization, we have one area of focus, but we're very good at helping organizations get the most out of their IT and finance transformation projects, or even being able to expand those into different functional areas over time so that you can streamline your IT footprint and get more value out of your investment. We've delivered over 100 Anaplan projects. We have 13 master Anaplanners, and we bring a lot of subject matter expertise. Most of our consultants were business practitioners before becoming consultants. Most of us learned the technology after years of experience, either in consulting or industry. So why are we all here? It's because things are pretty crazy out there, and every week we seem to see some type of issue or another where everybody's trying to get a handle on their cash situation and ensure the liquidity and solvency of their organization. Probably the first week of April, I saw like Tenet Healthcare, since that's up there, they went through suspended 401k matching, deferred all discretionary spending, CapEx, increased borrowing capacity, actually issued some senior secured notes, and actually were able to add another $200 million onto that. By and large, like every day, there's just more and more scenarios being run and more decisions being made. So we're really trying to help with that process. And how do we help with that process? We're looking at cash flow management and cash positions. So we really look at it as two phases. Right now, we're in really the cash forecasting phase, where we're trying to analyze our historical cash flow analysis, our current cash position, and our expectations through the near and midterm. So looking, definitely under 180 days to ensure liquidity. Where we do solutions around balance sheet cash flow and liquidity planning for more longer term capital structure funding, strategic items that are more longer term in duration. We're not going to be addressing that today. We're going to be addressing that on a webcast in May. Where we're going to be focused today is on our immediate liquidity needs. So taking those operational drivers and being able to run scenarios on them to make an impact in informed decisions across the organization here in the very near to midterm. So I just wanted to make sure everybody's aware like what we're going to be focusing on. So the challenges, some of the typical challenges are just a historical lack of investment. There just aren't that many solutions that solve for cash forecasting given the level of granularity. Typically, I think roughly 85 to 90% of all organizations currently use Excel in order to manage their cash system. Most treasurers and finance teams are either don't believe their cash forecasts are accurate, or they're not timely, or if they are accurate, they're only accurate or reasonable for a certain number of days. There's a lack of forward-looking visibility. Then there's just some general treasury management structure issues. Is it centralized? Is it decentralized? Are there organizational unit differences if you're operating in more than one area? And then there's just the tactical issues. So not being able to see the transparency, having different systems that are different channels or different way things are laid out, and the lack of automation. So one of the issues is that they, every time they loaded the data into the Excel to make some updates, it takes them time to turn that stuff around, fix any source issues, and then actually by the time they have everything ready to make insights, things have changed, especially in an environment like this. So, that's what our solution is trying to solve for. And I'm sure everyone's aware of the problems, but the problems are, and there's risk to cash sources. So customers not paying, people paying more slowly, customers asking for discounts in order to pay on time, just general reduced demand for products, services, or whatever you do. And then if your balance sheet position is deteriorating, sometimes the lines of credit are secured based upon your working capital. And that could mean that you actually have reduced borrowing capacity. And underlying all this is you have to pay. We obviously try to make payroll the last thing to ever cut, but we have to pay right now. So we have payroll, invoices, leases, utilities, capital expenditures, and obviously like debt payments and interest payments that occur at different times throughout the month. And that's important because things don't operate at a weekly or even a month perspective. They happen at the day level. So those debt payments and those cash interest payments and payments that occur and go out dispersed, like that happens at the daily level. So you need to manage your cash position at that daily level in order to ensure that there's cash where and when it's needed, no matter what your organization is. So, how do we do that? We look at our cash outflows, possibly renegotiating payment terms, reducing purchases, or looking at updates to our workforce. We also look at cash inflows, incentivizing receivables, managing credit lines, and we are always monitoring the KPIs that are necessary for us to understand how much time we have, what's our burn rate, what happens if X, Y, Z happens. How we better manage all of this thing is actually getting into the operational granularity of this to run different scenarios to see the impact of whatever this does based upon what we change. So like if we're talking about not paying some of our vendors, so we're trying to push out when we actually pay the people we do business with, like it probably makes sense to have some type of prioritization about what is strategic and really necessary for us to pay, or putting in more stringent controls around when checks are issued or when payment is made. Really building that playbook of scenarios that we want to constantly be evaluating, and being able to add additional scenarios or take different courses of action based upon an ever-changing business and organizational environment. Being able to manage that commercial paper, your revolving line, ensuring you have enough cushion and available credit in case something unexpected happens. So what is our solution? Our solution is focused on speed, detail as well, but automation and integration with the various source systems. So our solution is built on Anaplan, and Anaplan, being just such a powerful platform, really allows for real-time calculations, scenario analysis, and the reporting of that without any processes really needing to be run. There are pre-built automations to various data sources, and we can sync that up pretty easily. We also have the ability to bring in that transactional level detail from our GL, our HR, our AR, AP, and TMS systems, as well as others, and being able to make decisions and then still drill in and see what's changing and how it's being done. There are statistical and predictive capabilities in Anaplan. For our presentation, we're really not focused on that so much because with the amount of things that are changing so quickly and the change, we've just found those to be a little unreliable right now. In the future, when things get to more of a steady state and companies aren't in such flux right now. So our solution really takes all of that data and information, allows us to run scenarios and see real-time results and see the insights into our business. We have transparency. We have detailed scenarios around working capital, payroll. If we want to change merit-based increases and change those to zero, we can do that. We can also get into multi-unit, multi-bank, multi-currency type of information and modeling in order to ensure that we have cash wherever we need it. And it's applicable across all industries. I want to state that because what we're going to show is a pretty agnostic demonstration. However, we can and will incorporate your priorities, your organization, how your organization does business, who are your customers, how do you pay? Like, for example, if you are a restaurant, B2C restaurant, or some other organization that's B2C, where most of your customers are paying via credit card, there's not a whole lot of big invoices that are going. It's more of tying it to the revenue forecast. So your AR is not going to be the priority, maybe AP and capital where your priorities lie. So, and there's just various different nuances that we can incorporate, whatever industry you're in, really how you operate. Here's the connected planning for finance. We're not going to focus on too much outside of just the cash forecast, and maybe I'll just briefly touch on what we're going to talk about. But really where we're going to focus is on this cash flow today. And there are other use cases. So in sales, when I look at the cash forecast, this is where we really bring together everything that's necessary for our cash forecasting. So being able to bring in our receivables and other cash receipts, as well as all of our payables and different obligations that we have to meet in order to continue our operations. And how we do that is having different controls in place and being able to run scenarios both at a high level and in detail. So that's really some of the power that we have here, is because we have that ability. And with that, what I'm going to do is pass it over to Matt, and we'll go from there. And he's going to run through the presentation of our solution.
Thanks, Curtis. Okay, we've just logged into the solution, and we're going to start out with our executive summary. This is our landing page, and what we're seeing here is basically a high-level cash flow statement by month. So we can see beginning cash, operational activities, investing, financing activities, and a net cash flow and balance at the bottom. And what we're really going to do today is we're going to look at both a high level and a granular approach to these different operational levers that Curtis mentioned that we can pull to extend our positive cash position. So right now we're looking at 3 different scenarios in this: our baseline, which has no changes, our current what if 1, which is what we're going to be playing with, and we've also got a what if 2 that extends that cash a little bit farther than either of our current scenarios. Right now, our what if 1 scenario has 21 days until we are in a cash negative position, and our goal is going to be to extend that plus 90. So we move to our cash flow summary, our CFO and Treasury cockpit, and this allows us to see day by day and in a different scenario view what our ending cash balances are by day. And then we've also got below a little sources and uses calculation to get to a net cash flow. So what we're seeing here is, and I want to highlight that the current date in this system is March 25th, so just a couple weeks ago. But in this system, we're seeing that on April 15th, we are cash negative. And so like we said, that's 21 days from now. And so we're going to look at those high level and granular items that we can pull, and just a sample of them today to get us over that hump. So the first thing that we're going to talk about is accounts receivable. Accounts receivable, we don't have a lot of control over. We can offer discounts, we can call our customers, we can incentivize them to pay us quickly or accelerated payments, but it's not like AP where we can just put a straight hold or a straight acceleration. But what I want to do is, starting with kind of a high level scenario, we're just going to say that all of our late invoices are going to be received within the next week, and we're going to give those customers a 25% discount. If you notice up here, our net cash flow and cash balances changed a little bit in our next 14 and 7 days, but our days until cash negative didn't change. Now, we obviously want to watch this mark, and knowing that all of the changes that we make aren't going to necessarily impact that day count, but they are impacting our cash flow. But when it comes to AR, we want more than just a high level approach that we can take on this. We want to look granular. We want to look at our AR, managing that customer by customer and invoice by invoice. And so that's what we're able to do on this dashboard. We've actually got a detailed customer by customer aging schedule. And in real time, we're able to see the detail of all of the invoices for that customer, when they were issued, when they were due, if they are late right now, the total amount. If we're looking at currency translations, we have those options available. And then we can even put in our our expected issuing date of payment toward us. And we can negotiate discounts with those customers. Now, we talk about this as expected issuance date for a couple of reasons. In this model, one of those reasons is standard payment type. So customers with the history that we've pulled in, we're able to say that Vandelay Industry has traditionally paid us with ACH, and we have seen the cash transfer into our bank account and become available within about 3 days. If you have customers that pay with checks, we might want to talk to those customers to try and get to an ACH or a wire type payment to receive funds a little sooner. Also, with today's coronavirus scare, maybe we don't want to be trading paper. Maybe we'd rather have all those things come through electronically, so you're lessening the risk of contamination. One of the other things that we did in this model is we've ranked all of our customers by their ability to pay. So maybe customers with a low ability to pay, we don't want to talk to them as much as customers with a medium or a high ability to pay. We'd rather focus our collections on those customers of ours that we can really actually impact the acceleration of their payment. So we do have some of those statistics here on a customer by customer basis. We've also got links to the invoice. So this would go right to our accounting system, and we can see what invoice it was that was sent to them, if there's any details on that invoice that would be pertinent to our AR clerk. going back to the cash flow summary, we're going to look at AP. So one of the things that Curtis talked about was we're seeing a lot of companies already defer their AP payment. So we're going to run through a scenario exactly like that, high-level scenario. We're going to defer all of our AP, and we've categorized our vendors by how important paying them is to our business continuing to run. So in this case, we're looking at vendors with a priority level of medium and below. We're going to hold all of their invoices for 30 days starting on the 1st. And we can already see that that bought us 19 more days of cash positive. So we see the change over time here. We're able to see the increase in our positive cash position, but we also want to be able to manage AP at that granular level as well. And that's where our AP aging schedule dashboard comes into play. Just the same as we saw with our AR, we've got AP aging schedule by vendor. We're also able to see those invoices in detail. We've got links to the invoice that would be in our accounting system if your company is one that receives electronic or scans in their invoices for details. We can add in expected pay dates. And we can add in expected pay dates on all vendors, whether they are included in this scenario above or not. Maybe we know that we're going to hold all AP for medium and below priority companies, but we know that there are a few select vendors that are medium high or high that we can still delay payment. We can run through that granular scenario and we can see the changes over time. Now, granted, changing the expected pay date for one vendor isn't going to extend our days until negative cash by a lot, but if you were to do the same exercise over all of the vendors, that might be a very different story. As we move down our cash flow summary, I'm going to skip a couple of the items that we have that we're not highlighting, but one of the things that we saw in some of the surveys and even in the poll this morning is talking about line of credits. This fictitious company right now has a line of credit of 1.5 million. And so what we're going to do is we're going to say we were in talks with our bank to extend that up to 2.5 million. So let's see what that does for our days until cash negative. That extra $1 million bought us another 28 days. So in this current scenario, not a lot that was gained by that, but that's okay. 28 days is 28 days more than we were currently able to stay open. The last trigger that I wanted to touch on is really our workforce management. Now we do have lease property management. We have the ability, if you're a company that has like a fleet lease, we would have the ability to do things like that, manage that. But I want to talk about workforce because it's such a big topic. So many people and companies have already gone through the furlough situation. And so we're going to run through a situation where we're going to furlough all of our employees at one of our locations. And we're going to do it for a 3-month period of time. And we're going to see that's what in this situation, in this scenario, got us over that hump of our goal of being 90 days cash positive. But we're able to do the same thing on a granular level, which would be employee by employee. We could do term or furlough by date by person. We also have some other scenarios available, such as suspending 401k matching, deferring bonus payments. We can furlough by other categories other than location. We can really customize this to any situation that a company would be interested in as far as their workforce planning. At the end of the day, and let me go back to our executive summary. At the end of the day, what we're able to do here is see the way that we can pull different operational levers to extend our cash positive position in order to make a more strategic decision for our company to extend that 90 or 180 days of cash solvency farther and farther out into the future. And with that, I'm going to pass the torch back over to Curtis.
Thank you. So Our focus of this presentation was on insurance solvency and liquidity, for a company that's in some extreme stress, right? Now, not every organization is going to be in that situation. However, our solution allows us to be a proactive management of your cash position at your operational level that allows you to make some strategic decisions in real time with a lot of data. So that's really some of the power. And what Matt showed, that's not an all-inclusive list of scenarios. The solution we have is made to be totally configurable based upon your priorities and the specifics of the scenarios that your organization needs to be running in order to manage and maintain your liquidity so that you have enough buffer in order to make it through any challenging times in the future. So this is meant to be an ongoing tool that can be leveraged throughout time. It's really getting down to being able to proactively manage what drives your business, really understand what is allowing you to proactively manage your business, providing transparency and informing decision-making through scenario analysis and just the operating of your business. And really, how's this enabled? It's really enabled through automation so that you have the timeliness of data and integration of data from all of your various source systems, because typically it's pretty complex when you roll it out. So just to rehash what the current state for most people, most organizations is it's in Excel, which just creates some real scalable and timeliness problems when when you have to build these things and try to run scenarios like this. It's typically a pretty excessively manual process. There's issues with actuals and forecast data, issues with automation of sources, issues with circularity and transparency. Unfortunately, it's typically a process that doesn't get a lot of attention when times are good and cash is rolling in. But in times like today, that's really important, especially if your organization sees this as being a longer term issue or something that's going to be around for 6 to 12 to 18 months or possibly further, because the impacts of what's going on right now is going to continue having some level of impact going forward. So again, our solution at Allitix to this cash management and cash position planning is really centered around the rapid deployment. So we're ready. We've had a bunch of projects kick off 100% remotely. So we're ready to work that way, and we can do that pretty easily now. Really getting into making sure that we accommodate and build with you the client-specific scenarios that your business and organization needs, and then helping to automate the data feeds in order to inform decision-making to see those real-time results. We believe we have a quick time to value on this and can deliver some, if not all, of what you've seen and what we've presented in a number of weeks, not months or years, et cetera. And in areas that we may not be able to do it in real short period of time, we can easily improve your models and add detail and add scenarios over time very easily through the way we can promote updates to the models within Anaplan. There's some more information and upcoming events. Like I talked about, the balance sheet, cash flow planning, and strategy webinar. We're planning to have that in May, probably more of a corporate focus, and then another one on fiscal impact and scenario planning for some of our higher ed and healthcare clients. And then there's obviously information on our website. And with that, I just wanted to turn it over to Drew, who's managing the Q&A.
Yeah, hi, thanks, Curtis. And again, thank you everybody for attending the webinar. We do have a couple in the feed come in. I'll just start with the first one. It's how do you deploy the solution in a company with decentralized businesses with different ERP systems?
So I can take that one. So Anaplan is a pretty robust system, and it allows us to take the different decentralized if it's business segments or different ERP systems, we can actually bring that all together, and using some rules, logic, and mapping in Anaplan, we can bring that all together into one centralized location. So there's the ability for us to bring it all together and have you view it in aggregate form, but also we could break that down so you could see it in the decentralized form as well.
Thanks, Matt. For more complex company structures and banking relationships, is your solution able to handle things like intercompany loans, sweep accounts, or escrows?
So yes, we can handle those, and we'd be happy to schedule a follow-up meeting to kind of discuss the details of that. But again, using the mapping and the rules that Anaplan allows, we can bring all that together in one central spot. And we can provide the ability for you to run through different scenarios, just like we did today, where you could go through intercompany loans. And one of the things that we didn't look at was kind of our banking relationship management that's in here, such as loan covenants or borrowing-based certificates, where we can run those calculations in real time to make sure that you're not falling out of those debt covenants.
Yeah, and just to add into that, if there are any multinational organization, we do have the ability to incorporate any cash pooling logic and stuff like that in order to move cash around.
Let's see here. In order to update all the data in the model daily, how much of my staff's time would be needed? And this is a great question in relation to Anaplan versus some of the other solutions or Excel out there. Is really just what is the amount of management needed for Anaplan in general?
So it's going to depend on your company's specific needs and what your technologies are, but Anaplan offers ETL integration. So really the automation that Curtis talked about earlier is possible. We can fully automate this system to daily invoice updates.
Yeah, and to add to that, I know we have several current Anaplan customers on the webinar. For most of you who do act as the model builders, you guys probably have a pretty good understanding of data flows in and out of Anaplan today and how you would manage that. If you are interested in learning more specifically to the model that we have, we can certainly address that in more of a one-off discussion. How can this be applied to different industries, specifically higher ed and some of the industries that are out of sort of your normal corporate function that might be government or higher ed type of institutions?
So the underlying logic behind all this stuff around AP management and some of the capital planning or inventory planning and items like that, it's really creating that cash buffer. So managing your position, your cash position over time. It's really, it's applicable to every industry to make sure that you have the money in order to pay what you need. Like say you're that type of organization and you have a deferred pension obligation that occurred and you need to make a cash contribution and stuff like that. I mean, you need to make sure that you have the cash readily available in order to make that contribution. And any item like that, it just gives you the more flexibility and ability to go into that level of detail with the customers and vendors that you work with.
Are there any statistical predictive capabilities that can also be leveraged in combination with this model?
We can run through statistical forecasting in Anaplan. We have a separate tool that we can implement that does that. However, the accuracy of your statistical forecast is always based on the accuracy of your history, really. It would depend on how much historical information we have and how relevant that is to the future. Right now, we're going through a volatile time, so some of the statistics that would come from the historical transactions might not be too applicable to the forecasting of short-term cash flow.
And I think we're just going to take one more. Is this a solution that's directly sold through Allitix? Do we have to own Anaplan? What should customers of Anaplan currently look for or non-existing customers?
Yeah, so that is a prerequisite. However, given the environment, I think Anaplan can move pretty quick as well. Obviously, if you are an Anaplan customer, adding this on is purely a consulting engagement with Allitix. If we need to add Anaplan as a technology that you have at your organization, feel free to contact us and we'll connect everybody together and get things moving pretty quickly. I do know that Anaplan helps if you're a certain type of organization, and with everything going on, Anaplan is working diligently to try to help companies out as are we at Allitix. So just really want to help get solutions in place to help everybody manage through this these challenging times and ensure that they have the cash on hand to meet their obligations.
Excellent. Thank you. And with that, I think we're going to wrap the webcast now. Thank you again for everybody that attended. Stay healthy, stay safe. If you guys have any further questions, please feel free to reach us at the web addresses below. Otherwise, you all have my email address from the multi emails you guys received regarding this webinar. Feel free to reach out directly to me as well. Thank you, everybody, and have a great rest of the week and weekend.